Next chapter, accounts from incomplete records. Meaning of incomplete records. Accounting records which are not strictly kept according to double entry system are known as incomplete records. It is not a shortcut method as an alternative to double entry system. It is rather a mechanism of maintaining records whereby some transactions are recorded with proper debits and credits, while in case of others, either one-sided or no entry is made. Normally, under this system, records of cash and personal accounts of debtors and creditors are properly maintained, while the information relating to assets, liabilities, expenses, and revenues is partially recorded. Hence, these are usually referred as incomplete records. Features. It is an unsystematic method of recording transactions. Generally, records for cash transactions and personal accounts are properly maintained and there is no information regarding revenue or gains. Personal transactions of owners may also be recorded in the cash book. Different organizations maintains records according to their convenience and needs, and their accounts are not comparable due to lack of uniformity. To ascertain profit or loss or for obtaining any other information, necessary figures can be collected only from the original vouchers such as sales invoice or purchase invoice, etc. Thus, dependence on original voucher is inevitable. The profit or loss for the year cannot be ascertained under this system with high degree of accuracy, as only an estimate of the profit earned or loss incurred can be made. The balance sheet also may not reflect the complete and true position of assets and liabilities. Calculation of profit or loss. Every business firm wishes to ascertain the results of its operations to assess its efficiency and success and failures. This gives rise to the need for preparing the financial statements. The profit made or loss sustained by the firm during a given period and the amount of assets and liabilities as at the closing date of the accounting period. Therefore, the problem faced in this situation is how to use the available information in the incomplete records to ascertain the profit or loss for the particular accounting year and to determine the financial position of any entity as at the end of the year. This can be done in two ways: preparing statements of affairs as at the beginning and as at the end of the accounting period, called statement of affairs or net worth method. Preparing trading profit and loss account and balance sheet by putting the accounting records in proper order, called conversion method. Preparing statement of affairs. Under this method, statements of assets and liabilities as at the beginning and at the end of the relevant accounting period are prepared to ascertain the amount of change in the capital during the period. Such a statement is known as statement of affairs, which shows assets on one side and liabilities on the other side. The difference between the totals of the two sides is the capital. Though statement of affairs resembles balance sheet, it is not called a balance sheet because the data is not only based on ledger balances. The amount of items like fixed assets, outstanding expenses, bank balances, etc. are ascertained from the relevant documents and physical counts. Statement of affairs format. Liabilities, bills payable and creditors, bills payable, creditors and outstanding expenses. Assets, land and building, machinery, furniture, stock, debtors, cash at bank, prepaid expenses. Balancing figure, capital. Balancing figure of statement of affairs will be the capital, either opening capital or closing capital. Statement of affairs in the beginning gives opening capital and statement of affairs at the end gives closing capital. Next, calculation of profit. Preparation of statement of profit and loss. Format, capital at the end of the year plus drawings minus additional capital equal adjusted capital. Again, deduct opening capital from the adjusted capital. Answer will be either profit or loss, net profit or net loss.